Alright, so there are plethora of funds available in the market to invest your hard-earned money, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? Today I have with me Pankaj Mathpal, MD, Optima Money Managers. Also, do not forget to send across your questions on our WhatsApp number, which is 86579745571. You can also email us your questions on the money show at etnow.tv. Alright, so let's begin and let's take Mayur Gori's question first. And before that, good evening and welcome to the show, Pankaj. I have Mayur's question for you ready, and he says that he's been investing in Axis Blue Chip, HSBC Value Fund, HDFC Mid Cap, Pinorebeco Emerging Equity, DSP Mid Cap, SBI Mid Cap, Nippon Small Cap, SBI Small Cap, Nippon Multi Cap, and he wants to know that if there's any suggestion that you might want to give for his funds. The fund mix. Also, he's been holding this portfolio since 2015, and he says that he's a long-term investor. We are not sure about the corpus that he wants to accumulate, but then the choice of funds first. I think let's begin with that.
Good evening. Definitely, if he's been investing since 2015, he must have made good profit through his investment. But one thing is there, he has too many funds in the portfolio, and in same category, there are more than one fund. So I suggest that he should think about stopping some SIPs, and especially if I talk about the Axis Blue Chip Fund, the performance is not that good. The scheme has not been able to beat benchmark given, and mostly we have seen in large cap that most of the large cap funds are unable to beat their respective benchmarks. So considering that fact, I'll suggest that if you can switch from Axis Blue Chip Fund to Axis Nifty 100 Index Fund, which is a passive fund, that will be a better choice. And also, as he has Canara Robeco Emerging Equity Fund and Nippon India Multi Cap Fund, I'll suggest that he should have only one fund out of these two. And as there are two small cap funds in the portfolio, if he cancels his SIP in Nippon India Multi Cap Fund and divert that amount to Canara Robeco Emerging Equity Fund, that will be better choice. Also, DSP Mid Cap Fund, I suggest that he should stop his SIP in this scheme, and the SIP amount can be diverted to again Axis Nifty 100 Index Fund. So one large cap fund will be switched to Nifty 100 Index Fund, and this mid cap fund, that amount can also be diverted to Nifty 100 Index Fund. So there will be lesser schemes and a better portfolio.
Right. I want to understand one thing. So, is it right for investors to adopt a passive strategy in large cap is concerned? Because you're also recommending him Axis Nifty 100 Index Fund and asking him to replace it with Axis Blue Chip. Any specific reason behind this recommendation?
Yes, Kavita, we have seen that in large cap category, most of funds, large cap active funds, have been unable to match the performance of their respective benchmarks. So, if because we have seen almost all funds, they have that benchmark hugging portfolios. So, considering that fact, I'll say that if you are not getting any advantage of investing in the actively managed funds in large cap category, so why not choose passive funds? Because the expense is lesser and performance is little better. So considering that fact only, I suggested that he should go for uh, Nifty 100 Index Fund, which has all top 100 companies of Nifty, means as a Nifty 100 Index. Those stocks will be in that portfolio.
All right, so that's the word coming in for Mayur. A couple of changes suggested. Accordingly, he can go ahead with his financial portfolio. But then let's take Arvind's question. He is on the line with us. Arvind, hi, good evening. Thank you so much for sending us your question. And you want to invest in a ALSS fund?
No, madam. We are actually plan for invest 12,000 per month for SIP for ELSS fund for tax package. So we are plan. So my question is how many AMC can take ELSS fund and which was the best?
Okay, you want to know the AMCs that offer ELSS funds. You already have ELSS in your portfolio.
No, now not zero. We are
Okay.
plan to acquire
So,
to start.
okay. Pankaj, ELSS funds recommendation.
Yeah, again, almost all AMCs they have ELSS fund. But first thing I'll say before I recommend the name, I'll suggest you. Um, See, if you are filing your ITR in old tax regime, then only ELSS will help you. So first thing you have to see which tax regime will be suitable for you for the next year. Because when you're asking that you want to invest to SIP, it means you are planning for the next financial year. And considering that, if you want to invest 12,000 rupees per month, I'll suggest you two schemes. There are many schemes in this category which are performing well. But looking at the portfolio, two schemes I'm recommending to you. One is Motilal Oswal ELSS Tax Saver. Another scheme will be White Oak ELSS Tax Saver, which is a new scheme considerably. The portfolio is very good. So Motilal Oswal Tax Saver and White Oak ELSS Tax Saver Fund. These are two schemes recommended by me.
All right, so that's a recommendation, and these kind of questions are come a lot before 31st, before 31st March, Pankaj. Also, the kind of ELSS funds, how do you actually analyze? You've recommended Motilal Oswal ELSS Tax Saver, and you've recommended White Oak ELSS Tax Saver. Any specific reason why you have picked up these two funds only, looking at all the EMCs having their own ELSS offerings?
There are two things. One is past performance, and second is forward looking. So when I'm recommending scheme now, I have checked their portfolios and considering that what kind of allocation they have, because some schemes are largely into one kind of market segment, and some schemes are well diversified. So that you have to see. Second thing, what kind of stocks are there in the portfolio? So if I'm expecting from some sectors or some kind of stocks better performance in coming years, so that is the criteria for selection of that scheme, whether it is a ELSS or any other scheme. But for ELSS, because there is no particular market segment that one has to invest. So here we see the diversified scheme, which is a good portfolio, number of stocks. So considering these all facts, I found that these schemes are good if you are investing now onwards, considering your tax planning and if you align them for your long-term financial goals.
All right, let's move on. And I have Mr. Sandeep Singh on the call with me. Good evening, sir. How are you doing?
Good evening, Kavita. I'm good. How are you?
I'm doing good, sir. Thank you so much. And you're calling from?
I'm calling from Mumbai.
You're calling from Mumbai. Thank you so much for sending us your question. And I believe there's some change in terms of your asset allocation that you want our experts to answer for you. So clearly, you have logged in your money in ultra short term.
That is correct.
Okay. And now you want to park that or switch that money to a long-term debt fund of the same AMC, and currently your exposure in equity and debt is 62 is to 38. ICICI Pru, you've given the AMC's allocation that you might have, the breakup AMC wise. Apart from that, equity is not given to us, right?
Yeah, basically my query was only for the debt
Only
part.
for the debt part of your portfolio. Sure, sure. Okay. So even if you want to switch to a long-term debt fund, what's going to be your time horizon?
About 7 years, 5 to 7 years.
Oh, 5 to 7 years is a good amount of time. Okay. You don't want to consider a hybrid strategy in equity for that, since it's 5 to 7 years?
I can go for that. Yes, sir.
Yeah. Okay. So let's just give you recommendation on both fronts, because if the time duration is 5 to 7 years, and if you have a hybrid option, because we do have conservative approach also in a hybrid offering, So I mean, no doubt, ultra short term or a long term debt fund is a completely fixed income, but then you can also look at conservative strategies in hybrids. So Pankaj, let's help him on both the ways. Okay. First, let's explain parking his money in a long term duration fund, and his reading is absolutely right, because it seems the interest rates have really peaked out. And although now if you are parking in a long-term debt fund, there could be a volatility, but if you are logged in till the particular time or the time frame that you have the fund offering for, then there shouldn't be any interest rate risk as such. What do you say, Pankaj?
Kavita, I agree with you. See, this these short-term funds are only for parking money for a short term, and at this moment when we know that rate cuts are expected going forward, that
We
long
may
duration funds will be a better choice. And if you really want to invest in debt fund, then banking and PSU fund, that is one category which invest in banking and PSU debt papers. So where credit risk is comparatively lesser, you can consider such banking and PSU fund like ICICI Prudential Banking and PSU Fund, or IT Birla Sun Life Banking and PSU Fund. Or apart from that, corporate bond fund can also be considered, but you have to see the underlying portfolio where the rating of the papers is good. But that can also be a good choice. So corporate bond funds and banking and PSU debt funds. And here, because the duration of the underlying paper is longer, so if there is a rate cut, you will have a better yield in the portfolio, you will earn better returns. But as Kavita, you suggested, I agree with you. If the investment horizon of Sandeep is 5 to 7 years, then in this case, hybrid funds can be a better choice. And we have conservative hybrid fund, we have aggressive hybrid fund. But in this category, when we talk about hybrid and 5 to 7 years, this balance advantage fund, which is also known as dynamic asset allocation category, that is a better choice. So I'll suggest you, if you're investing for 5 to 7 years, then SDFC Balance Advantage Fund or ICICI Prudential Balance Advantage Fund, that can be a good choice, which can invest in debt and equity both. And from time to time, they can change the allocation between equity and debt. So if you want hybrid, then these two schemes can be a good choice. Otherwise, in debt for long term, I have suggested you few schemes. You can consider that.
all right. Mr. Singh, anything else you want to ask Pankaj? Are you clear with the answer?
Yeah, I'm good with the answer. But as I said, you see, like, as my age is 52, and I would slowly, I'm trying to shift from equity to debt just to preserve the capital. So,
Sure, sure.
what can you suggest for that?
For your rest of the portfolio?
Yeah, for the debt, this folio, yeah.
All right. Pankaj?
Yeah, definitely. Then I suggested you like ICICI Prudential Banking and PSU Fund, IIT Birla Sun Life Banking and PSU Fund. You can consider these schemes for long-term debt category. These can be considered.
All the best, Mr. Singh. And on that note, let's take a quick break. And Pankaj is connected with us, and we also have our viewers connected on the phone line. But then time for a quick break, and post that, let's continue this Q&A session. Welcome back. You're watching The Money Show and we are answering your portfolio queries. And I have with me Pankaj Mathpal. And let's move on and take Vivek Tiwari's question, viewer of ours. And Vivek has Axis Mid Cap, he has Parag Parikh Flexi Cap, he has Mirasit Tax Saver, SBI Multi Cap, ICICI Pru Nifty Mid Cap 150 Index, UTI Index Fund. And apart from that, he's also investing in PPF and other debt related instruments. So far, the details that I have are not very clear in terms of time horizon and the kind of financial goal he has. But the fund mix clearly can be improved, and he's got a passive mid-cap fund, which is very interesting. At a time where people want to go in for an active strategy in mid-cap and small-cap, he has a passive strategy in mid-cap fund. So this is going to be my second question to you on mid-cap passive strategy. But then before that, Pankaj, the fund mix.
Fund mix seems to be good, though I don't know that how long is what is the investment horizon. But if you see large cap, mid cap, small cap, all the market segments are there, and in the respective categories, these schemes are good. So allocation wise is good if it's a portfolio for more than 10 years. But second thing, as you said, that passive fund in mid cap category. Kavita, see in large cap category these days, you must have noticed that most of the time I recommend passive funds. But when it comes to mid cap and small cap, I'll say that there's a much scope for stock selection. So well managed active funds in these categories, means mid cap and small cap, can outperform the benchmarks. So investors who are investing for long term, they can consider actively managed fund. Yes, there's a scope that both the strategies can be followed. Within portfolio, you can have actively managed funds as well as passive funds. But in large cap, as I mentioned earlier, I recommend mostly passive funds. So if he has one passive fund in mid cap category, uh, he can add one actively managed mid cap fund as well. And like Motilal Oswal mid cap fund is a good fund in this category that can be considered.
All right, so that's the word coming in for Vivek. We move on to Deepak's question, again a question via email. And he has Tata India Tax Saver, he has Tata India Equity PE Fund, SBI Small Cap, HDFC Defence, Parak Parik Flexi Cap, Mirasit Large Cap, SBI Mid Cap, HDFC Focus 30. He wants to know if any change needed in his fund mix, and he's been investing since last 4 years. Pankaj.
So there are too many schemes. One is that in flexi cap category, and he has focus fund as well. See, focus fund and flexi cap fund both follow the same investment strategies. Only difference is that the flexi cap funds are well diversified, and focus fund can have maximum 30 stocks in their portfolios. So I'll say that you can exit from the focus fund if you want to reduce number of funds in your portfolio. Second thing, you have one HDFC defense fund, which is definitely a good fund at this point of time. It has performed very well. But as a thematic fund, you have to keep monitoring the performance till the time defense sector is performing well, this team is performing well. You can hold your investment, but you will have to exit at some point of time because in diversified funds, you can stay invested as long as you want. But when you choose a sector or theme, you should know when to exit. So in last since June, since the scheme was introduced, we have seen a very good performance. Maybe that for some time you can see same performance, but you will have to exit. So please keep monitoring the performance of this fund, and whenever you feel that due to some changes, geopolitical or any other region, that you have to exit from this fund. That is very, very important.
All right, let's take Amrish's question. And Pankaj, Amrish has Axis Long-Term Equity, Axis Mid-Cap, HDFC Dividend Equity Fund, HDFC Banking Fund, Tata Focus, SBI Nifty Small Cap. Current portfolio is, the value is almost around 8 lakhs. The target is 3 crores in 15 years. SIP is 5,000 in all the funds. Yeah. And he's got 6
See,
funds.
yeah. First thing is fund mix for the portfolio. I'll say that HDFC Banking Fund, I suggest Amrish should exit from this fund. And HDFC means, Amrish, what you can do is you can switch from this HDFC Banking Fund to HDFC Nifty 50 Equal Weight Index Fund. So from the sectoral fund to a large cap index fund, that will be better choice because we know that in all the funds, if you see the allocation of banking sector, it is very high. So adding one additional banking sector fund is not a good choice. So HDFC Nifty 50 Equal Weight Index Fund will be better choice here. Second thing, your target, if we assume 12% CAGR from this portfolio, in 15 years, you can expect around 1.87 crore because you have 8 lakh, the value of your current portfolio plus 30,000 rupees per month SIP. And at 12% CAGR, it comes to 1.87 crore in 15 years. So if your target is 3 crore, you will have to increase your SIP amount. So simply if you step up by 10% every year, and in the same time period, in 15 years, I mean, you can accumulate 3 crore rupees.
All right, on that note, it's a wrap today. Thank you so much, Pankaj, for being on the show and helping our viewers with their financial portfolio queries.